One of the concerns when we speak of fund flow specifically is what happens in a post-QE world. And that, I think, is weighing on market sentiment specifically. How do you read that?
Yeah, well, look, that's a valid concern. I mean, we had this global QE is being reversed in the United States. It'll eventually be reversed elsewhere. But you also there's the why and the what. You know, if we're growing strong and they're raising rates and reversing QE, that's actually, I think, going to be fine.
Yeah.
You know, if it has to be reversed in a much faster way, if America has inflation, then you can see central banks doing things that we won't like and that people get a little bit concerned about. But in and of itself, the world's growing, and reversing QE is the right thing to do. Normalizing interest rates is the right thing to do.
Well, speaking of interest rates and normalizing interest rates and withdrawal of the QE, what does the yield curve look like as far as the U.S. is concerned, to your mind?
Yeah, look, I'm not worried about it. I think people, again, are overestimating the importance of the yield curve. And the 10 years over 3% now, you know, it really, in effect, in my view, should be closer to 4% today in a normalized world. We do have 2% inflation. So again, I look at the underlying. If the growth is good and the Fed is normalizing rates and raising rates, that's a good thing. If they had to do it because of high inflation, that's okay. That's a little bit more recessionary.
But speaking of the wild cards, and I'll use that term, which has been used in one of your JPMorgan reports, you know, you've been concerned about the trade war that's currently underway between the U.S. and China. We've seen another bunch of retaliatory tariffs being imposed. The markets so far have shrugged this off. What do you make of that?
Yeah, because it's not a trade war. I call it a trade skirmish.
Is it still a skirmish?
Yes. The American government and our president is right to raise the issues particularly about China. We would like to see a NAFTA deal done. You know, the strategy you go about fixing it is a little bit different, and I may have used a different strategy. It's unclear where we're going to get to. But if you look at tariffs on $200 billion, okay, so just make believe it all got passed on to American consumers. They have to pay another $20 billion, something like that. It's a $20 trillion economy. So the actual economic effect is not dramatic. There is an effect on the psyche, the mind, as the trade skirmish become a trade war. Right now it's just trade tit for tat, and hopefully we'll get to resolution. I don't expect a trade war. But I also don't expect any progress before elections. So I think you have to wait after November to see if we make real progress.
So what do you then expect?
But a trade war would reverse. Oh, if more countries get involved, if people start to put more barriers up, and you can seriously affect people's psyche, confidence. People stop investing money because they're not sure about where they should invest money. Right now, it's a bunch of skirmishes that hopefully will lead to a good outcome. I would worry about it because I think it could offset some of the positives we had from regulatory reform, tax reform, and other pro-business policies.
But what would you expect as being the next leg, so to speak, of this trade skirmish, as you called it? Because we had Wilbur Ross on CNBC say that China perhaps doesn't have too much ammunition left. The Chinese responding, saying that, look, we have sufficient tools to take on the U.S. So what would you then expect in terms of the next steps, the next measures?
I don't know. I mean, again, you're asking, we can raise tariffs more, we can add tariffs to more things, the Chinese will retaliate in other ways, and I don't think all that's good. It's not a devastating thing. Okay, it's not a war. It's a trade skirmish that can have negative economic effects, all things being equal.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.